Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Ooh, cutting it close today. All right, but we're ready. We're about to get the numbers here.
Target filled.
Wow. What just happened? 73 versus 104. And what's the headline number? Unemployment rate stays at 4.2%. Hourly earnings in line at spot 3%. Okay, so 73 is a significantly weak number. We were kind of, the expectations coming in was anything above 100 would be bad, would be considered good. 70, I think, is decently enough. 104, because 104 itself is weak. That means that that employment is getting worse, even though you don't see the change in the unemployment rate. But remember that those two things come from separate surveys. So the establishment survey, where they are polling payroll companies, is showing that payrolls have declined this month. The household survey, where they call households and they survey them, shows that unemployment has not changed. But we should also remember that the household survey is people aren't picking up the phone. So a lot more of that survey is essentially made up. So this is going to be a pretty big boost to the Treasuries. So my robot we're testing here should have gotten out before that trade. Oh, that's so weird. It should have gotten out, and it didn't, and that might be I might not have a setting right. Like if I come into the strategies here, let's check it out. Yeah, see, can hold through news and can enter during news are both off. So it should have exited at the before halts, and it did not. So I could investigate that. But the weird thing is that it hit its profit target before things flipped around and went long. So the robot got insanely lucky there. Insanely lucky there. So are we getting some massive steepening in the... Oh, yes, we are. Wow. So we have erased all of the downside moves since the Federal Reserve meeting and then some, and we are also considerably higher in the yield curve. Let's come over, look at the larger term time charts, the more midterm charts. So here you can see this was the Federal Reserve Day 2 days ago. We are well above that now. And here at the bottom, you can see the yield curve. So the yield curve is well above that as well, although not as high as it was a week ago. But that says to me that we have some considerable steepening to go potentially. This is I don't know. I don't feel like a 30K is like justifies a trends all day, but it doesn't matter what I think. And one of the things I should note is that the volatility going into this was they were pricing higher volatility than last meeting or last non-farms. but lower than most of the year. And so I think that they underpriced this a little bit. So this really could result in some massive flows. Okay, it's still going. Here's the S&P. SPOOs took a big hit yesterday, and now they are well below the lows of the week. So that is also something that could trigger a fair amount of selling. We're going to have to come over to these higher time frames so you can see here in the Treasuries, after having kind of bounced around in the moving averages for a couple of days, we are bouncing higher up off of that. And the S&P 500, well, all of the moving averages are well below us, and monthly lows are all the way down at 62.41. So it's ugly, but I don't think that we're quite to the point where you really see momentum come in and start screwing things up, much like it did over here. Okay, we're kind of if this were to turn into a real downturn, which interestingly enough, you see this right here. Oh man, I should have gone short. This day I drew this and I was like, well, if we come down, how far down could we come? And that was pretty early in the trend. Anyways, we're like right here. If we were to get another downtrend in ES, all right? Maybe here. All right. So could we have a double dip? Could be interesting. Okay, some other assets. Oil coming back because there was a lot of macro downside action in the overnight. Maybe they knew that this non-farms was coming. Plus, I think a lot of it was Donald Trump announcing more tariffs on people. I think that they were saying Canada was going to be 35%. Although they got a week before it goes into place. Silver bouncing here, but gold and silver took some hits this week. Kappa's still reeling from this head fake where they're like, oh yeah, we're gonna put tariffs on copper. Oh, just kidding. Ugly chart. Japanese yen. Look at the jump in the Japanese yen, man, and the dollar. The dollar giving up almost $1's worth of gains off of that news. This is a big one. This is a big one. And where are we now? Well, finally. I mean, this is one that if I had decided to trade the aftermath, and I've really kind of given up on that because I have screwed it up so many times. But this is the big one where I would trade the aftermath and probably would have got something like 07. Like, okay. Whoa, I didn't get the full story, guys. Wow, it's even worse than the headline, because they revised last month's number down big time. Let's see here. Can I get the where can I find well, it'll be here on X. May revised down to, oh, okay, it wasn't quite as bad. Oh, wow. Okay. May was revised down by 125,000 from 144,000 to 19,000. June was revised down by 133,000 from 147,000 to 14,000. Is that not nutso? 100,000 adjustment when our number is less than 100,000. Wow. The revisions for both months was higher than the total amount of job growth in this number. And hey, maybe that one gets revised down next month too, and it's actually negative. This is one of the worst jobs reports I've ever seen outside of the pandemic. This is really bad. Trump calls on Federal Reserve Board to wrest full control of the central bank from Fed Chair Powell. Oh my gosh, guys. This is bonkers. I'm not even sure what to say at this point. Well, I feel like that I've been on this for a while, right? I don't know if I was on the Federal Reserve Board, I don't know if I would have joined the dissenters or not, but I'm definitely voting in September to cut. And that I was feeling that way before this report. Okay, but can I take another victory lap on something? Because during the whole Biden years, we were saying, what's with these revisions? They're really big. The BLS must be sandbagging and, manipulating the numbers to make Joe Biden look good. And I kept saying, no, they can't really do that. But what they can do is they can set the model up in a certain way. And I think that what we're seeing here now kind of supports that theory. The model was changed to basically be like always look better than it actually is initially. And then have major revisions further back. It's basically what happened. And probably the way that they justified it was, well, this accurately reflects the data that we have right now. Whereas the previous models probably said, well, it always looks a little bit better than it actually is, and so they compensated somewhat. It's the same to me that the NFP releases day of are worth a shit to the market considering the revisions. Well, it is kind of interesting, isn't it? Why does the market care so much about the headline number if they get revised so much? And I think that it is a combination of both history. It's always been one of the biggest numbers of the month, and everybody's written their algorithms and strategies and everything else around that. But also partly that even though the revisions are really, really big and the number is not very accurate, and the number has always been very hard to predict, it is just a very, very significant, important measure about the economy and probably one of the most important data inputs as to whether or not we cut or raise interest rates. So it's kind of like they have to care even though they know the number sucks. So let me shift that one around then. Okay. It's insane to me that there's not more people saying, hey, maybe we should look at the model that we use to get this number. Maybe there should be reform to this report. Why is there not more discussion about there being reform in this report? Every time that it comes up, the economists are just like, no, they're doing their best, and this is just what the number is. Deal with it. No, because your model sucks. And somehow it has gotten significantly worse. Because, like, seriously, when the revisions are more than the whole number? Come on. That is an insane amount of error. I don't know, man. Well, but you know what? To me, the thing that I find the most interesting about this is that this really kind of shakes things up. In the social media landscape, I've been seeing a lot of people this week, Democrats mostly, saying, you know, like I saw one set of people that they were all marking themselves as safe from inflationary rate cuts on Wednesday. I don't know, I've been hearing this thing everywhere. There's like, no, they can't cut because cutting rates is inflationary and there's going to be inflation. There's going to be inflation, guys. We need to keep interest rates high. That's what the liberals were saying. And well, it's not that simple. Because we had interest rates low for a really, 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 really long time. And we didn't get any inflation. It didn't result in any inflation. I think those of us that are kind of a little, you know, should I call ourselves a little more savvy? I think that we are, to be honest with you. I think that we are. Now, I think that the savvy ones looked at this and said, well, yeah, they're printing a lot of money, but it's not necessarily going into the real economy or making it down to regular people. It's just going into asset inflation. That's what was happening. And that's why it didn't really result in the effects that the Federal Reserve wanted. And I kind of look back on that now. Well, you do have to print money to deal with deflation. And there's a really strong argument to be made that it was just, there was a lot of really deflationary forces at that time. But I look back on that and I still say they should have raised rates earlier. Should have raised rates earlier than they did. And I think that the economy would have been just fine. But we would have been in a much better place fiscally. And, yeah. We would be in a better place fiscally, and we wouldn't have had so much wealth filter up to the top. But the more that I look at it, the more I come to the conclusion that you could come in and you could say, yeah, this policy it helps the rich. Having really low interest rates, and it just goes into assets, and that makes those that hold assets richer and everybody else more poor in comparison. And now you can kind of look at it and you can say, well, the interest rates are too high, and that means there's less employment. And so the people that were getting paid really well before are getting laid off and having a hard time. And so that's just allowing the rich to increase their wealth even further, right? But I think the reality is that it doesn't matter what your policy is. The rich can position themselves in a way that it helps them and everybody else can't. So it always results in helping increase income inequality. Okay, so Newsquack is saying that the market has now regained 2 full rate cuts this year. So market is saying they think there's going to be a cut in September again, whereas before it was kind of weak. Granted, there's like 2 more non-farms before the next Federal Reserve meeting, so things could change. But Nick Timrose 5 seconds ago, it won't get much attention given how the revisions show a much slower pace of job growth than previously reported, but the index of aggregate weekly payroll is a good monthly proxy for nominal income growth, as it correlates well with nominal GDP growth. It was up 5.3% on the year, up from 4.5% in June, as hours worked ticked higher and hourly earnings growth was steady. The 12-month rate has been in a tight range between 4.5% and 5.3% over the past year, close to the pre-pandemic norm. The thing just moved on me. The 3-month annualized rate, which has been noisy, rebounded from 4.6 in July from a downwardly revised 2.8% in June, which had been the lowest of the post-pandemic expansion. Mohammed A. El Arian, when viewed in its entirety, the monthly U.S. jobs report was weaker than expected, specifically while the unemployment rate and monthly wage growth met consensus expectations. The economy added only 73,000 jobs, missing the forecast of some 100,000 jobs. Also, job creation for the prior 2 months was revised down by a total of 258,000. Labor force participation also ticked down from 62.3 to 62.2. So does that mean there's lots of layoffs, and many of those layoffs are older people, and so they're just retiring? Now that kind of paints an interesting picture, because I'm not saying that that's necessarily what's happening right now, but let's say that we did have a recession. We have a recession, then probably a lot of boomers would wash out. They would retire at that point. And then it would be harder coming out of that recession because there'd be less workers. Although I think like half the boomers have already retired anyways, right? So, yeah. Okay, so now we're getting Trump on Twitter, on Truth Social rather, saying too little too late, Powell has been a disaster. But the good news is we're getting a lot of revenue from tariffs. So, I don't know. They have not backed off of this very much, have they? Okay, so we got Fed's hammock at the top of the hour, but I think that we're also going to be getting commentary. Although I don't see it on the calendars, I saw it in my News Squawk synopsis that we are supposed to get the two dissenters making their case today, but I don't know when that would be. I'm going to guess that they must be scheduled to be on TV or something, because those are the ones that I usually don't get on my calendar. There's Kevin. Kevin, you don't have to tell me where you live every time. I remember you live in Florida. I mean, I'm probably not going to remember Lakeland, but I remember that you live in Florida. And probably 6 months from now, I'll forget about it. And then you'll tell me, and I'll be like, oh yeah, I'm so dumb. But for now, I definitely remember you're from Florida. Lakeland is where Publix lives. Yeah, we got a lot of people in Florida. A lot of people in Florida. Maybe I should move to Florida. Florida. Now, I think if I'm going to retire, if I'm going to, like get super rich and retire early and go and live somewhere, tropical, I think I'm going to move to Ibiza, not Florida. I should really be more keyed into this than I am because, like, this is such strong order flow coming through here, man. I'm gonna move my, I don't know what he meant to say with happy, but to Minnesota. I want the cold, but Alaska is just too far off. Yeah, and plus the days are too short in Alaska. Everything I've heard about Alaska is that there's lots of people that are like, oh, I want to move to Alaska, and they do it, and then they realize, oh, I hate Alaska. They have a hard time retaining people. But man, I love the winter in Utah. We get good snow. I like skiing. There are some people that hate the snow and driving in the snow or whatever, but that's a good part about Utah. What I'm starting to learn is I hate Utah in the summer. Like, I don't think that people realize, like, I don't think that people outside of Utah realize how big of a deal this is. And I don't think that people inside of Utah realize how big of a deal this is, but they do kind of change their behavior anyways. But elevation affects how the heat hits you. And at these higher elevations, being outside in the summer is just death. You will get sunburnt. You go out there, even 15 minutes, you'll get sunburnt in Utah. You just don't go out there without being covered. Wear long sleeves, have something covering your neck especially. Wear a hat. Because that sun is brutal. And so I think there's a lot of people in the South, when it gets hot and it's just like, okay, that's fine. We'll just go outside and fan ourselves. And I mean, it's hot and it's a humid hot. So I'm not saying that it's like, it's comfortable or anything, but it's not going to kill you. It's not going to kill you quite as much as sitting outside in the sun all day will in Utah. And so, I think in Utah, it is, you want to be here during the winter. And then, if you were somebody that was retired and super rich, I think you want to be here during the winter and then go somewhere else during the summer. And of course, wherever you go, it's probably going to be somewhere hot. But lower elevation. Go somewhere that's at sea level. And I like dance music, so I would go to Ibiza. Now, might argue, if you like to ski, you like the winter, then shouldn't you be going and living in British Columbia, where they have like some of the biggest snow mountains and stuff like that? Well, the problem is, one, their season starts a little bit later, and two, it gets so cold over there. It's like negative degrees. So skiing over there in January, February kind of sucks. Really is the case. Utah has the greatest snow on earth. Utah and Denver. If you're going to go skiing, best place to go is Utah and Denver. Sorry, Salt Lake City and Denver. Should I reset here? That was a pretty big amount of volume there at 26, but they're still not backing off. So this is something that we've noticed in trends, is when you're getting a really strong trend, you will get the behavior, which is, gotta, come on here. Gotta draw the picture. Where you get the square root law come in. And when it starts to do this is where all of the volume profile ends up being, right? But what tends to happen is it will build a little bit of it, and then it will spike higher and then come back. Okay. So we might be in that spike right now. We'll see. I still think that there's a higher probability than usual, even though I don't know if the numbers actually justify it. I think that there's a really high potential for trend day today. That the high of the day basically is the pick close in the treasuries. Now, what about the equities here? How much have they fallen? Well, okay, so they took a good hit on the news. Wow, actually, that's quite the chart. Well, I'm going to show that one large. They took quite the hit on the non-farms payroll, but then they actually pushed back higher because, like, hey, we will get a September rate cut. Now they're coming lower. I'm a little concerned. It's not just that we've been seeing for a long time that the labor market has been weak. For really the past year, the labor market is weak in a way that is not reflected by the headline number. Because hiring is just terrible. And if you don't have a job, it's a nightmare. It's a nightmare finding a job in this market. It really is like crazy dystopian stuff. Okay. But it's not just that. It's also that this all happens on the same day that Donald Trump, the deadline, and Donald Trump reinforces the tariffs that they're going to put on. And most countries did make a deal. Most countries, I think, did the right thing. But the countries that decided that they were going to play with fire and play tough are some of the most important strategic partners. Like, I feel like if I had to pick, that it would be more important to me that we get a trade deal with the European Union and Japan. Okay. But not having a trade deal with Canada, Mexico, and Taiwan is pretty big deal. Pretty big deal. Now, I wonder if a part of why it's Canada and Mexico is because we did have that USMCA deal during Trump's first term, and they don't like that we're trying to renegotiate that. So maybe that's why they're playing tough. But Taiwan is really like, oh man, really? Okay. I kind of thought that Taiwan would be one of the first ones to roll over. No, they've held strong. It is definitely slowing down here. It helps that America has examples of almost all weather types too. Well, no, so like the thing is, that I don't think that Europe realizes. Europe has a particularly mild climate. That's it. Europe has a particularly mild climate. Almost everywhere else in the world has more extreme weather than Europe, is my understanding. I'm not like a weather climate geopolitics expert, but like I was reading this article, or it was a TikToker, I think it was, talking about houses in Germany, that like even in the summer in Germany, it often doesn't get above 70. Like 80 degrees is a heat wave for the Europeans, which is why they don't have air conditioning over there. And they kind of design all of their houses to just kind of retain the heat instead. That's kind of wild to think about. Meanwhile, over here in the United States, we got parts that are just like really high elevation desert, where you go outside, you'll get a sunburn in 15 minutes. And then you've got the plains, which is Tornado Alley. And then you got the Northeast, which gets incredible ice storms during the winter. And still gets really hot. It usually gets to 100 degrees in New York every year, right? Like, it still gets hot in the Northeast. And then the South, which is basically like a rainforest in parts of the South. Yeah, you know how Europe is the rainy, cloudy country that they always complain about? We have states with higher rainfall every year. Yeah. The weather in the United States is way more extreme. And it's kind of funny that Europeans don't realize how big of a difference it is. But it's kind of funny that Americans don't realize how different it is for Europeans either. That's also like there are TikTokers where their whole shtick is they live in Europe and they're discovering America. Come over to the United States and vacation for 6 months, things like that. And the weather is always one of the first things that they talk about, and air conditioning. Let's see here. Varric says that Europe has been pretty hot. It's been 95 for almost a month now. Where, God, and that's the thing, is you think that 95 is like really, really hot. Dude, when I go outside to do my workout, because I work out in the garage, and I go and I look at it and it's 95, I'm like, oh, okay, it's not too bad. I tell you what, man, every degree above 100 is like worth 10 degrees below 100 for some reason. It's really weird how that works. But I'm probably am overgeneralizing, right? Spain and France can get hot. Spain and France get hot. It finally cooled back down to 95 degrees yesterday. So nice and cool. Yeah. Yeah. Oh man, I can't remember the last time it was 110. But I have experienced 110. I don't think that I've experienced 110 in Utah. But I do remember one time traveling through Las Vegas and it being 110. Dude, I remember going to Vegas one time and like the overnight low was 80, 90 degrees. Really weird being outside, pitch black, and it being that warm. I'm not being, oh yeah, no. The weather in the Midwest this summer has been particularly unusual. And apparently, all of the corn that they grow out there has a significant impact on the weather as well and makes it more humid. So it's been insanely hot and humid. This year, I mean, it's been hot in Utah, but this year, Utah has been has had the better side of the weather compared to the rest of the country. Because what's been happening in the Midwest has been eek. I'm actually kind of surprised. So there's a couple of weather guys that I watch on YouTube regularly. It's kind of weird to me that I get like regular weather reports from YouTube, but I mean, I guess it makes sense that it would move to YouTube. I think I kind of started mostly because of skiing, but yeah, I watched the weather report. It's been an unusual weather pattern for sure. I'd love more people. Misery loves company, huh? When I was a missionary for the Mormon Church, and I went to Missouri, and the first week, really the first month, in Wichita, Kansas, man, was like a 100-year heat wave that was just absolutely insane. And it was like 105 every day that whole first week. And we had just been sent to a place where they had like reopened it up recently. So we didn't really have a whole lot to go on. As missionaries, you don't want to spend time knocking on doors. You avoid knocking on doors as much as possible, because knocking on doors is extremely ineffective. So you're going to spend time revisiting people that that missionaries have visited in the past, visiting people that members refer to you, things like that. But we were in an area where they had nothing going on. So all we could do was knock on doors. Submitted. And it was crazy. Man, I'm a little bit weirded out by the fact that it's only now that I see an imbalance that triggers my algorithm. We got to talk about this. Hold on a second. Mini split technology should be drastically decreasing the cost of AC in older homes. Yeah. I really want to get a mini split for this room because it's too hot in the summer. And I have a window right there. I could just put it in the window. You get a really quiet unit. Okay, so the algorithm. So what we've been doing with this algorithm, there's a couple of different things that we're testing. I haven't run an algorithm for this long of a period of time, and it's doing a couple of things that are unique for us, like it factors in news and gets out ahead of the news, although today it didn't work correctly for some reason. It has done it correctly in the past, so I don't know what the deal was with today. Did it not have that news event on its calendar? Yeah, because there would be a line there. So for some reason, my CSV file didn't have that particular news event. That's what happened. Anyways, so it's doing a couple of things that are unique. But I would also say it's not necessarily a strategy that I would run live. It is in many respects designed to do something to kind of help us collect data rather than just be objectively profitable. And so yesterday I kind of looked at some of the data, and I was finding that where it exited, when it waits for an hour and it gets out, that when it waits for an hour, that it's been losing more often than not. Like, not just losing more often than not, but like losing a very high percentage of the time. So like, you take a trade, you wait an hour, and it's lower almost 70% of the time, 65, 70% of the time. That is a little weird. That suggests that we're on the wrong side of this trade. But there's also something to that. There is definitely, the signal seems to have more impact on the short term. So it's kind of like you get the signal. All right, hold on a second. Let's restart my let's restart the Epic Pen. It seems like it gets worse the longer it's been open. It's been open for days, so we'll restart that. So what seems to happen is you'll be moving up, and then you'll get the signal, and it spikes a little bit, and this is where we tend to get out. That's it. Maybe let me draw it a little bit bigger. So we have a little bit of upside, or we're getting a little bit of upside. You get in, it spikes, and then it comes back down, and you get out there. So it seems to me that we could modify the strategy to take a really, really short target. It would probably win most of the time. We could also set the strategy up to allow it a few ticks of buffer on the upside, and then try going short and catching the mean reversion. And it's not necessarily the trade, because the trade that I really like is, you know, the way that my discretionary trading works is we're going nowhere, and then I see it, maybe a little bit of an imbalance, and I get in, and then it just goes. That's the trade that I like to get. It's a really good, consistent long trend. And this signal is not like that at all. It's more of a mean reversion. And that is interesting to me, because I've always had a hard time finding a really good mean reversion setup. So I think I would actually probably rather have a mean reversion signal. So you get a mean reversion signal, and then we kind of amp it up on the taking risk part. You know, like let it sit there and be in that position for an hour if it needs to get 1 or 2 ticks, right? And then just make sure that the loss is not something that will be more than $500. And then you could go and pass combines with that regularly. I would really like to have a strategy that like the chance of you passing a combine with it is like 90%. And like 90% chance of passing a combine and getting a payout is what I would like. But then ultimately it will blow up eventually, so that the prop firms have to pay people out on these, but then will, you know, ultimately don't make money because the strategy does in the end blow up. Mostly because I hate prop firms. But I think that would be the most interesting thing. Yeah, for at least one payout before it blows up. Because then you get one payout, then you're net making money. The prop firm is net losing money. And then of course, how would the prop firm deal with that? Well, actually give you a live account. But if they actually give you a live account, you eventually blow the account, and so that's not profitable for them either. If somebody were to invent an algorithmic strategy that was really consistent, I guess the problem with this would be if we gave it to a lot of people, it would probably get arbitraged out of the market. But if we were able to find something that had as much edge, as much room in it as like momentum strategies did, right? That intraday traders could take advantage of, it could undermine the whole prop firm industry, and that would be crazy. That would be like stuff they write books about, right? That would be one of the coolest things I think that we can do right now. So I was thinking yesterday when I saw that, I was like, okay, now is a good time for us to start making more major changes to the strategy. Trying some of these things like making it a really short-term mean reversion signal, and adding some machine learning and random forests in particular is something that I want to try with it. Okay. But I don't think I'm going to do that. Hold on a second. Anyways, so why is that? So yesterday I came across this brutal self-assessment guide. Now, this isn't the first time that I've found an AI prompt like this, but this one was different for some reason. Like, the response that I got out of it was different. You want me to read you the prompt? Okay, so here's the prompt. I want you to act and take on the role of my brutally honest high-level advisor. Speak to me like I am a founder, creator, or leader with massive potential, but who also has blind spots, weaknesses, or delusions that need to be cut through immediately. I don't want comfort. I don't want fluff. I want truth that strings, if that's what it takes to grow. Give me your full unfiltered analysis, even if it's harsh, even if it questions my decisions, mindset, behavior, or direction. Look at my situation with complete objectivity and strategic depth. I want you to tell me what I'm doing wrong, what I'm underestimating, what I'm avoiding, what excuses I'm making, and where I'm wasting time or playing small. Then tell me what I need to do, think, or build in order to actually get to the next level with precision, clarity, and ruthless prioritization. If I'm lost, call it out. If I'm making a mistake, explain why. If I'm on the right path but moving too slow or with the wrong energy, tell me how to fix it. Hold nothing back. Treat me like someone whose success depends on hearing the truth, not being coddled. That's the prompt. Okay. So I've done similar prompts like this before, where I'm trying to get the LLM to tell me, like, because I really hate that it brown noses me. It really brown noses me, and I really hate that. And so I'm always trying to get the LLM. Tell me, what's the thing that I'm missing? What's the thing that I'm overlooking? What's the thing that I can change? And I have it do that a lot. And it's been frustrating because it gives me something that I already kind of know, and there's difficulties in dealing with that, and it doesn't give me any answers for how to deal with that, right? Or it just kind of glazes me, you know? It seems like that the LLMs have a hard time with coming up with nothing, you know? Like, they have to draw on other stuff. So like to come up with a unique idea, especially with purpose, they can't do it. Doesn't work. So I was kind of skeptical on this prompt, but this one was different. This one was different. And here's why this one was different. It says, you are spread too thin, hedging your bets and stalling on the hard choices, which is something that it said before. And I've been like, yeah, we need to kind of focus down. And it's stuff that we talk about on this stream too, and talk about it because ChatGPT has said this stuff to me. You haven't made a real all-in decision on what you're building. Are you a media brand, a platform founder, a trader with a public-facing edge, an educator? You say you want to build the platform, great, but your time and energy allocation don't reflect a founder building a high-leverage product. Live streaming and scattered content creation are bleeding time without driving compounding results. You're too afraid to cut the fat. You're afraid to pause or stop what's not moving the needle because you don't want to lose momentum on any front. But trying to hold it all together is killing your forward momentum. You are stuck in the middle. That's the death zone. You are understanding the difficulty of monetization and overestimating the reach of truth. The idea that if I just show people the markets aren't efficient, they'll flock to me is naive. No one buys the truth. They buy results, status, safety, and transformation. You're right that most of the trading world is built on bad ideas, but no one pays attention to correction. They pay attention to charisma, proof, and narrative. Right now, your work looks like someone trying to convince when you should be leading. If you change how retail approaches markets, you need better positioning, a villain, a movement, a tool that makes people feel powerful. That's not your dollar index, not yet. You're dragging your feet on product. You said it yourself. You know how to build platforms. You're fluent across Rust, Python, infra, front end. You even know what you want, an integrated machine learning friendly trading environment, but your execution cadence is too slow. You're iterating like a part-time dev, not a founder building for survival. Your focus on custom indicators and live stream tinkering is draining dev time and creating comfort distractions. You should already have a scrappy working prototype of your platform, reading data from files and rendering a usable chart UI. If not, what the hell are you doing live streaming? So this is where I started to go like, wait a second. Wait a second. It said, okay, you're hedging. You don't know if you want to be X, Y, Z, or whatever. But then it almost immediately focuses in on you should be doing X and you shouldn't be doing Y. I could not believe it. I couldn't. It was like, because the other prompts, they never did that. The other prompts are always kind of like, well, kind of would hedge on like what would be the best strategy for me. You know? And it even kind of starts like that, but then it very quickly turns into, no, why are you not doing this? You're not making ruthless financial or time moves. You have 3 hours a night and weekend time. That's enough if you're ruthless, but your allocation isn't built around leverage. You're still operating in builder mode when you need to be in multiplier mode. You're not hiring collaborators. You're not building distribution channels. You're not running tight experiments on what brings return on investment. You're sitting on a small pile of content, income, trading skill, and dev ability, but none of them are compounding yet. I don't know. It says a couple of other things that are interesting, but not necessarily relevant to the thing that I find really interesting. How's the bot doing? It looks like bad. It took a trade here and it immediately went against it, but it's back to break even now. And it got lucky. It didn't get out on the news like it was supposed to because the news wasn't in my CSV file this time. And it was the wrong way. Oh no, it wasn't the wrong way. It was long. It was long going into that news. And it moved against it, but it didn't trigger the stop. You have ability to talk a big game. You don't really do anything because being forward-facing in public increases the odds of you humiliating yourself if you screw up. Yeah, well, so here's what it said. It says, you are afraid of being wrong. You overanalyze hedge bets and second guess instead of launching and letting the market slap you into shape. You're spending too much time thinking and not enough testing. That really hurts because I always listen to this song called Transition by Underground Resistance, and there's this part of it that it says, did I let others dissuade me when I knew I could? Oh, do I spend too much time thinking and not enough time doing? Did I try my hardest at any of my dreams while I die, never knowing what I could have been or could have done? And I listen to that a lot. So when it says you're spending too much time thinking, it was, yeah, I do. It's something that I worry about a lot. But it also says you still want to be liked. Your critiques of the retail space are too cautious. If you believe most of retail trading is bullshit, then say it. Name names, expose myths, follow people clarity, and not polite nuance. I kind of feel like I tried to be as overt about that as I can, but okay, whatever. You're managing downside, not maximizing upside. You're acting like someone trying to protect the $1,500 a month ecosystem and not build a $50K a month platform. Right? Okay. What you're doing right. You understand leverage systems and the core flaws in retail trading. You have a multi-domain skill. You have media infrastructure and trading, which is huge if focused. You've built an audience from scratch and proven you can earn trust. You have urgency. You know the runway is short and you have real responsibilities. That's the raw material of someone who can break through, but you won't until you cut deeper and go harder. And then it gives you a plan. It says what you need to do right now. You need to make a hard decision. What's the empire you're building? Pick one. Media company for traders, a trading software company, automated trading hedge fund with public content research lab. Whatever you pick, go all in. Every project video product should feed that one video. No more random streams, side content, or passive discords. Okay. So it starts out saying you need to pick one of these. But then number 2, it says prototype your platform this month. And it's funny because it remembers things. So one of the weird quirks about LLMs is that it will randomly bring up things that you've said in the past, and it's almost like the LLM becomes obsessed about them. So just remember that. So here's saying you said Rust plus ICE plus CSV, get the basic version done. Don't beautify, ship a chart reader that shows you're building the future of trading platforms. No excuses, no waiting. Even better, build in public, make building the platform your brand for the next 60 days. Number 3, kill low leverage activities. No live streaming unless it directly serves a product or content growth. No more trying to revive the indicator business. Dead weight right now. Stop editing your own videos, hire someone, or go short form and scrappy. Ditch any project not creating compounding returns. It's funny when it keeps talking about 1.5K because that was just what I have. I have a wad saved up for, we need to update our data or things like that. Every evening you should have a single outcome code distribution or conversion. Rebuild your calendar around sprints and not availability. Reframe your message and brand. You're not another trader trying to help people learn the DOM. You're a guy exposing the lies of market efficiency and building the platform traders actually need. Create a manifesto for your new platform. Create a villain. Traditional trading education, lazy economic theory, trading influencers, a tribe name, a vibe that makes people identify with your mission. I've actually kind of tried doing those things in the past and it wasn't too successful with it, but we can try harder there, right? What winning looks like. 12-month vision. Trading platform in early beta with real users and feedback. Seth, known as a voice debunking traditional market thinking with a YouTube channel focused on narrative and progress. Email list, community funneled through short form myth busting content. Revenue diversified through product, community, and eventual tools. A reputation not for helping retail, but leading a revolution against fake complexity. If you want to change the game, then stop playing like an analyst and start acting like a founder with a war to win. Pick your hill, burn the ships, build what only you can build. I'll hold you to it. Is what ChatGPT said. Okay, interesting. It's an interesting prompt. It gives me some interesting stuff. There's a little bit of LLM-ness in there, like, okay, you know, it's picking up on that I've talked about making a platform quite a bit, trying to discuss with it what would be some of the infrastructure decisions. No, I was using GPT-4o for this one. So it was really weird to me that even though you can definitely see the LLM-ness in there where it kind of starts going one way and then all of a sudden it goes whoosh. It's like, well, you kind of act like you don't know what you want to do, but then whoosh, you should be doing this. What? Okay. So I asked it about that. I said, you say that I need to decide what kind of empire I am building, but then a lot of your comments are focused on prototyping my platform. Is that because you think that a trading software company is the best opportunity, or are you picking that up just from our past conversations, or because you think it's how I view my own priorities? Or are there other ideas that I haven't thought of that I should be exploring? Right? So now I'm asking the LLM to question its own previous message and explain how it got that. I pushed hard on the platform, not because it's the only path, but because it's where your unfair advantage lives. You're not just another guy with trading opinions. You're a rare hybrid. You understand real market microstructure. You can build real tech, and you've already built a community and earned attention. That trifecta makes a software-driven product exponentially more scalable than education, coaching, or content alone. You have a technical edge. You can build tools that traders actually need, not just talk about them. Most creators don't have that. They're stuck making videos and selling courses, and you're not. But right now, you're still playing their game half of the time. 2, your core philosophy screams for a product. You're preaching that markets are not informationally efficient, that most retail trading knowledge is outdated or delusional, that traders need better ways to see and interact with market data. Those are product insights, not just content ideas. If you only educate people on those truths, you're stuck with linear income and scattered attentions. But if you productize those truths, you can build something with real lock-in and growth potential. It's a beautiful thing to watch. You're clearly already leaning this way. You've said you want to allow Python strategies inside a performant platform. You're thinking about agent-based modeling. You're building tooling around data ingestion and backtesting. That's not a content creator mindset. That's founder DNA. I'm pressing on it because it aligns with what you've shown me, not just because you've said it once or twice. Well, okay, but that's because the content stuff I don't ask ChatGPT about as much, but I don't know, maybe. But let's pause and ask, should you even build software? Because this is the brutal truth section. Here's a real audit. And then I'll bring this over here so you can kind of see. Then it starts to, here it is. Then it starts to list out a table. It's like, okay, media company, education, coaching, trading software platform, automated fund / signal service, research lab, consultancy on complexity and economics, right? And then is it scalable, differentiated, leverage skills, revenue potential? And it goes through the thing and says, here's what it is with all of them. And when it lists them out like that, trading platform is clearly the best option. It's like not even close when it lists it out like that. You can go in multiple directions, but the platform is the highest return on investment if you can execute. It's the only path where you own the product, you build compounding IP, and you create a true wedge into shaping market structure conversations. You want to change how people think about markets? You don't just talk, you build the thing that changes how they interact with them. So this is another one of those things that's like, I have a hard time understanding how an LLM comes up with that sentence. Like, surely they're pulling that from somewhere, but they're pulling it from this other content. They are going through some logic and saying, yes, this is your best business opportunity. I want you to do this. So, like, what's so weird about it is it's not that it's giving me an idea that I haven't had before, but that it's the LLM seems so convinced. It's like it's saying you should do this, and it's like it's not gonna leave me alone until I do it. Was really weird. Yeah, he's asking an LLM to criticize him and diverts into analyzing and criticizing the LLM to having to face the criticism thoroughly. What you could do instead, then it kind of talks about why these are bad ideas. Your biggest asymmetrical bet, the only one that only you can pull off, is the trading platform. But to justify that path, you must treat it like a venture, not a side hustle. If you can't or won't go full throttle on a product right now, that's okay. But don't lie to yourself about building a platform. Go build media education engine and make your empire. But pick one and go all in on that. No more hybrid approaches, etc. Okay. Yeah, I talked about the inventory cost basis thing. It says no. Don't bother with it. So further, where was the other one that I wanted to show you? I asked it kind of like, well, I'm not too sure about the base of the platform, and it kind of talks about it. It still thinks that what we came up with is really important, but that's more platform stuff. Was it the last question that I asked? Or did I skip it? Oh, here we go. How about those that would argue that I should be putting all of my effort into trading? That's a valid challenge, and it deserves an honest strategic response. Let's break down from the ground up. You should just focus on trading. That's the highest return on investment activity. Building platforms, content, or community is a distraction. This is partially, and that's kind of always the approach that I've taken, to be honest. This is partially true, but contextually flawed for someone in your position. Here's why. Your edge isn't just in trading, it's in system syncing and communication. Most good traders can't explain what they do. Most educators can't trade. Most devs don't understand markets. You can do all three, and that's rare. And that's intersection is where real leverage is. You're not just someone trying to grow YouTube for ad revenue. You're building a trading native tech brand that happens to trade. Would spending more time trading increase my long-term impact and income more than building something bigger? For most traders, yes. For you, probably not. Why? There's a hard ceiling on trading alone. Even if you become an elite trader, your income is still capped by risk appetite and available capital. Now, no matter how much alpha you generate, there's no assist unless you productize it. You risk burnout, both emotional and cognitive, if you do only trading every day. Trading improves when you build systems around it. Every tool you create, every framework you build for others reflects back into your own process. A dashboard, you use it yourself. An indicator, it sharpens your model. A complexity model, it'll guide your trades too. This is how world-class traders evolve into fund builders, product leaders, and platform founders. They integrate, not isolate. You're not doing content instead of trading. You're doing it to find collaborators and engineers, build audience trust for future launches, crowdsource insights, and market edge. Cutting it entirely for a few more trades per week is penny-wise, pound-foolish if your North Star is bigger than just your P&L. Summary. You should do that only if you're in drawdown and need to rebuild, focus, or capital. You're not getting returns from community or content. You have no ambition to build beyond your own trades, but you've already outgrown that phase. You're not just a trader anymore. You're a founder in motion. So, but salary is a hard thing to risk. I really wish that I could be really, truly all in on it, which is to say that I could spend all of my time on it, but there are some practical reasons that I can't do that. But, you know, another factor here has been like, okay, we've got the YouTube channel. How do I leverage that going into other things? It's so bizarre to me that I'm not able to shake the LLM. Like most of the time, and maybe it's just because of the initial prompt that I give it, but most of the time when I ask it things like this and it gives me something, and then I'll be like, well, but what about this, this, and this? And then it goes, oh, you're totally right. And I can get the LLM to question itself. But not this one. This one, it's absolutely sure of a way. You can even see where the model is like, it's pulling other stuff, but then ultimately it knows that the main conclusion is you should be doing this. And it just keeps coming back to it, back to it, back to it, back to it. So like maybe I am suffering from like LLM induced dementia or something. But I really think that what we need to do is only stream once a week. That's one of the other suggestions that it makes in here. But basically if there is a major like CPI, then we'll do it on that day. And otherwise, we will do it on Friday. And it will only be once a week. And I will spend the entire rest of that time trying to build a platform. So here's the other thing that's weird. Is that I did that. And it kind of reminded me about a couple of things. Like one of the things that happened was, okay, well, to do this, it would really help to have this and would really help to have this. And I kind of sent out feelers and I never got anything back. And so it didn't really take off. So I went back and looked at those and I discovered that a lot of the emails had never been sent. They were still in draft. And so then I used ChatGPT to craft the slightly better message. And then sent them out, and I got immediate replies too, which was really weird. Yeah, so I think that I like wrote the whole email up and then thought that I had sent it and forgotten about it and was really ADHD about it. But I sent it and got stuff back. So like now all of a sudden it's like things are kind of happening. So now I can't even stop it. You're overcomplicating. I have children and a wife and I need guaranteed chip. Well, I don't know if I'm overcomplicating it. The reality is if I'm not working, if I don't have the day job income, there are certain bills that have to be paid. And my wife working full time does not pay for them. And I have 2 kids that require a substantial amount of attention when you're watching them. Or they'll destroy everything, and they'll get hurt and they'll get lost. I have to have hotel locks on every door to the outside in here because Asher tries to elope. So, but that's not the situation right now. The situation right now is I have a contract job until mid-October. and hopefully beyond that. And I have some time in the morning. And if I really focus down, I have some time in the evening to work on it too. So I think that I have enough time to do what we want to do right now. And if we get to October, November, and I'm back out on the market again, which I don't know. I know that they are interviewing other people, that they're like, if we can't afford him, we need to see if we can find somebody that in our price range. And I think that if they really, really try really hard, they will probably they could probably find somebody. I don't think that person will have the experience necessary to really do the job that they need, but I think that they might find one. So, because like it's a brutal market, you know, there's lots of people that are desperate. So, I think it might be the case that I think it's a pretty high probability that they don't hire me on full time. And I already have some other things lined up. Although some of those are ones where I would not be able to do this at all. So I'm kind of avoiding those ones. I don't know. Like the thing is that it's not even that it's saying things that it has that the LLM hasn't said before or that I haven't said before. But I don't think we've ever had. I was not thinking I need to put all of my everything into a trading platform. I was kind of obsessed with that idea for a while. And then the more I got into it, the more I was kind of like, I don't know if now is the right time. I don't know if I can really do it by myself. And it's just not the time to be funding anything. And, you know, the software platforms, the technology is kind of in a weird spot too, that kind of make it difficult. So I had kind of turned into, you know, like I did the cost basis thing. I did the sear charts thing, right? And now the LLM has made like a really, really good argument for, no, really this particular thing, it stands so much better of a chance. So, and I understand where it's getting it from, because it really is like when you're doing startups, right? You get a bunch of people and they're really talented and they get together and then you say, okay, what are we going to build? Oh, we're going to build this. And then you make up a plan and you go and you start presenting it to angel investors. You probably aren't going to do very well, because what is, you just came up with this idea. The only thing unique about you is that you had the idea. And so what they actually want to see is they want to see that there are things about you, advantages that you and your team have that nobody else does, that's going to allow you to be successful, where anybody and that even if there's somebody else with the exact same idea, that you're going to beat them. So you need to have unique advantages. You need a moat, right? And what ChatGPT is doing is it's going through the startup mindset. It's basically, it's probably like pulling on content it's read from Y Combinator. And it's saying, oh, but Seth actually does have that, so he needs to do it. Is how I think it's coming to that conclusion. So that means we're gonna do it, right? I think that the big thing is I really like doing the stream, and I really like what we've got going on here, and I'm like really afraid to like stop streaming and things kind of die off and everything, especially for several months. So we've done a week before, but we've never done several months. And, you know, I might have a tendency to come in and just start reading news instead of starting to program right away. But I think we can deal with that. I'm let's see here. I should check next week. I actually haven't checked next week's schedule. It's not a CPI week next week, is it? It is a CPI. Oh, it's on Monday. Oh, what's the bank holiday on Sunday? That's August 3rd. Oh, no, we don't. We don't have that. That CPI was a different country. So then is CPI the week after that? Okay, CPI is Tuesday the week after that. So it's time for me to get going. And I'm basically like, Uzi is taunting me like you're not going to do it. No, I'm going to do it. I will see you guys next Friday. And unless you chat with me in Discord, I'll still be in Discord. And maybe one of the things that I can do if I find some time is use the mailing list to send out like a synopsis of the market to get some of that content that you get from me every day about like what's coming, right? Can get that in newsletter form. Oh yeah, I do want to address this comment from Paul. YouTube has started age-based censoring probably due to content watched, but it could still be something to watch, possibly changes YouTube for good. Well, yeah, so basically what it's doing is if you are underage, if you're not an adult, it's kicking you back into YouTube Kids, essentially. I kind of think that these social media laws that they've got going on in the UK and Australia are a little silly to apply to YouTube. Because it's really, Instagram is really the problem. But whatever. I don't think that it will change our content, but it might affect the platform, yeah. We'll see. It really seems to me like the world is moving into one where we are going to control what kids can see online. And you know what? I think that it's probably ultimately a good thing because, you know, there's too many ways around any kind of controls that a parent will try and put on. And yes, you can like use a VPN and things like that, but I don't think that most kids will. So I think that it probably will be a net benefit, even though it's not like a perfect moat. It will be a net improvement for kids. And I hope that it will be a net improvement for content overall. You know? Because, man, that when content started catering too much to kids, like YouTube really went downhill. So maybe it'll be a good thing for them. All right. Yeah, I thought you guys would say a little bit more, but it was kind of like, no, you should do it. Well, we're going to do it. I'll see you guys next Friday. This is scary to me. That is scary to not see you guys for a week till next Friday. And I've got to do some stuff and have something to show you by Friday too. Or you're going to chew me out, right? So I'll see you guys on Friday. Stay excellent, team.